Hi, everyone. Sorry we're starting a little late. Had some technical issues. But welcome to the 136th episode of the Timing Research Show for May 1st, 2017. My name is David Kosmeter. I'm the creator of Timing Research. And today we will be talking about the 188th weekly report. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com and you can download it there. I have Rob Hanna back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Great getting to be back here. Apologies, the technical difficulties I think were partly my fault, if not all my fault. Normally you get to see me, but today it's just a big QE, it looks like. We do have a couple of guests here with me today, and we may get another one popping in shortly. So we have, why don't I start off? We can go around and introduce ourselves. When I start with Jim, you want to give it a start on your end, Jim Kenney?
Yeah, Rob, no problem. I'm Jim Kenney. I provide the content for the OptionProfessor.com DVDs. And basically, there are 7 option learning DVDs, starting with the basics, going to intermediate, then to advanced strategies, looking at the options from the buy side and the sell side, and the use and the risk of all the different strategies that we've got on there. And, some people are looking to hedge with options. Some people are looking to do limited risk spec with them, and some people are using them to write them to try to bring in some cash flow. So lots of moving parts, lots of things to know about, and basically I provide the content for those guys at the OptionProfessor.com.
Great. Thank you, Jim. It's good getting to talk to you again. It seems like we talk almost once a month now.
Sure.
Which is great. You always have a lot of good ideas and input. Michael, can you go ahead and introduce yourself and tell us a little about your site as well?
Sure. My name is Michael Filguera. I take care of logicalsignals.com. Right now, we're shifting our web hosting site. And so I'm kind of on hold with getting a lot of things back and updated, but I hope to shortly be back to running fully. So I provide all the content, but I also have a trade room, and within the trade room, we focus on day trading. And I also offer a couple of algorithms that can be used. And we basically just trade during the day, and
okay.
That's about it.
Are those when you say you have algorithms that you use, are they automated systems? Are they okay?
Auto traders, as we call them.
Okay. All right. Great. And then I think,
Yeah, Rick, are you there? Yeah.
I think I am.
All right, good.
I finally got in. I think I am. I'm not sure.
Rick, you came in just after me, so you're not too late. Don't worry about it.
Okay, cool.
I was plenty late myself. So, go ahead, Rick, if you'd like to give us a little background on you and your trading and what you do at Hit and Run Candlesticks, that'd be great.
Sure. My name's Rick Sadler, founder of Hit and Run Candlesticks. I've been trading for about 29 years now, and we've had the trading room open for about 10. We try to focus on simplicity using price action, support, and resistance. There's a couple of indicators we might use from time to time, but nothing serious. Strictly, what is price doing? Price is king. Trending stocks, swing trades. We have 4 coaches on board to help new traders or anyone that would like to take the next step. And want to thank you for being here. I apologize, I don't have my camera working. I've got it up here, but it doesn't seem to be working.
Well, I'm in the same boat. I actually shaved for everybody, and
well, that's what I did. I just Skyped to a partner. I said, "Man, I cleaned up."
I know.
Cleaned up for nothing.
I did the same thing, and then the computer I normally use wouldn't work, so I had to log in on the other computer, which doesn't have a camera.
Yeah.
So you guys can just assume I look really good today. All right, a little bit about myself for those who don't know. I'm Rob Hanna of InvestiQuant. InvestiQuant came from I've been trading since on a full-time basis since about 2001. I used to write for trading markets for several years. Then I started my own blog at Quantifiable Edges. That was in the beginning of 2008. And I've Quantifiable Edges evolved into a website and full service, and it still is. And it's focused on swing trading. In 2012, I created a site called Overnight Edges, which then ended up merging with Scott Andrews' Master the Gap site, and is now it's part of InvestiQuant. And at InvestiQuant, we do everything from intraday trading to overnight to swing. And my expertise is in the overnight and swing areas. Scott's expertise is in the intraday areas. So that's a little on my background and what I do. You can check me out at InvestiQuant or at Quantifiable Edges these days. And thank you for having me on. I apologize again for being late. Why don't we run through this? This works pretty good last time. Everybody's allowed a one-word answer, and then we can go through again and give our percentages that we assign to our confidence levels, and talk about what kinds of things we're going to be looking for in this upcoming week, or why we're giving an up or down answer. But why don't I go in the same direction we just introduced ourselves? Jim, if you want to go first, we're looking for the answer to question number 1, which is which direction you think the S&P will move from today's open, which was pretty close to Friday's close, to this upcoming Friday's close. So May 1st to May 5th. You looking higher or lower?
Well, I'm, obviously it's a guess, and so because we're in a pretty tight range now, 2,400 to 2,380, and so my guess from what I'm seeing here is that it's going to roll over a little bit, and the economic news that came out today.
Hey, slow down, Jim. You got one word here.
Oh, one word. Okay, I think it's going to slide over, but it's in the middle of nowhere here, so it's basically 50-50.
All right, we'll come back. I want to hear all the details, but we don't want to influence the other guys, and you don't want to convince them to change their answer just yet.
You got it.
All right, Michael, what do you think? Higher or lower?
Higher.
Higher. Okay, good. We already got some disagreement. Rick?
Lower.
Lower. All right. And I am completely on the fence here, but I'm going to say higher. So it's 2 versus 2, which is pretty much perfect. All right, Jim, now that I cut you off so rudely, let's go back and why don't you give me some rundown on what you're thinking about and why you think we might roll over here a little bit. The first thing is selling this thing has been hazardous to your health, so that's why it's a very feeble rollover situation. But there's enough out there for it to be somewhat realistic. One is the transports are a little weaker and have a hard time going above that 9,600 high point. 2 is the VIX went down to 10. 3 is the economic news already announced today is pretty darn feeble, and unless there's some kind of a against the grain news coming out on the unemployment at the end of the week, or some of the other things that are coming out, like consumer credit or something like that, to get people really riled up again. Clearly the FANG has got everybody going. The FANG stocks and Apple, and the repatriation has gone nuts as far as money flow going in there. No doubt about it. They obviously are betting that there's going to be a huge repat and also a huge buyback of stock. And obviously that's the way everyone's betting. In the short run here, like I say, the bloom seems to be coming off the rose on the numbers, and the 2,400 still intact, so you know where your ceiling is. And if we got through 2,400, it could accelerate very dramatically. So, bottom line is, if it doesn't, going back to fill that gap between 2,350 and 2,370 might be in the cards. Okay. All right, all makes sense to me. I'm looking at the 2400 number as well. I'm not normally like a big on support and resistance, but obviously that's an all-time high there. And I do find it interesting that we already busted out last week with the NASDAQ breaking 6,000 for the first time. So that has led. S&P hasn't gotten there yet. And I don't think the Russell has either, right? That was getting pretty close.
They made a little bit of a new high, and then it retraced back underneath it.
Okay. All right. Michael, how about you? Tell us what's having you lean higher. If it's a lean, maybe you're 100%.
It's definitely a lean. I tend not to really play on a long-term view, but on the weekly view, I think we still have a little bit in earnings. I think that the NASDAQ up the S&P kicking and screaming. I think we are at the completion point of a very long-term bull move, but my feeling is that it's, whether it does it this week or next week or the week after, that it needs to go above 2,400.
Okay.
And I don't think that spells bullish or breakout or anything else other than market just doing what the market does.
Right. Yeah, I mean, you've got momentum to the upside right now, right? And it's been to the upside for seemingly forever at this point. So,
it has been forever. And
right.
As I tell traders, I say nothing goes up or straight down forever. It just doesn't happen. But this has been a very stubborn, bullish move. We've got, like has already been said, we've got a lot of things on the table this week, and could easily push the markets in either direction. We got the Fed meeting starting tomorrow, finishing up on Wednesday, and then we get the press conference after. That's for sure going to move the markets, and I mean all the markets. So I think that's what's kind of really leading people to question. It's like, so it's not really moving up too much. It's not moving down too much. It's kind of just sitting in as we all sit in this wait and hold period.
Yeah.
So, but I think it'll end. We believe it'll end higher.
Okay, great. And as you point out, there are some important things coming out, especially the Fed meeting. Employment on Friday was another one that was on my list.
Right.
So we should see some potentially moving news coming out this week. And actually, Fed meetings have been quite bullish over the years, but that doesn't necessarily mean it's going to follow through more than a day or two. I've done a lot of work on that, so I can talk more about that later. But yeah, it's it does give you some positive seasonality this week. Plus, we got all that trend you were talking about. Okay, Rick.
Yes, sir.
You were Michael, do you want to give a confidence level to the higher reading?
55.
55. Okay. Rick, you were thinking lower, it sounded like, and
Yeah.
tell us how firm you are on that and why you're thinking that, I guess.
Yeah, I'll go with, let's get out there with about 65%, maybe 70.
Okay.
At Hit Run Candlesticks and myself, I'm a follower of price, and I follow candlesticks, and I follow them pretty closely. I try to anyway. And right now, we are up against resistance, which that's not a huge deterrent for me because price could blow through resistance. But what we have is, what is today? Monday, Friday, 30. Wednesday, we had a shooting star here on the S&P, followed by a little doji, then a bullish or bearish engulf, which all that is saying that the bears might be trying to take over a little bit. And I've got a line on my chart. Are we sharing charts or?
You can.
Oh, can I? Let's see. Share a chart. Screen share.
Yeah,
I think share that one right there.
I haven't done it in a
Oh,
while.
how cool is that? All right. You guys are smoking. So, we've got this shooting star right here. And then we come over here and throw this little bearish engulf, which all that kind of tells us, that the bears are taking some control. Let me get a 3-day chart up here. Come on. There we go. And you can see how we've just hit this top. And I just, if we blow through, if we stay above the 23.6920, the bulls can certainly take it higher. Below that 23.6920, I think we've got a serious bearish tilt here. And these candles are just suggesting we have a pullback. The question is, do we get below the 23.6920? But my 65-70% is because of this pulling back down into this area here. That's kind of what I'm looking at.
Okay. Now, in looking at that with my technical eye, the other thing that I see as potential there, and correct me if you disagree, it's fine, is that we've got this consolidation now over the last few days near the resistance level. So if we bust out above that, you could get a bit of a go. It's not a perfect like cup and handle type formation, but you got kind of a handle off the base there is what I'm looking at it with the.
Oh, I absolutely agree with you. If we break out, then it's all good. Everything is wonderful. And you're right about the whole, you've got that cup and handle maybe working here. We just need to see that breakout up that way. But I'm just concerned about those candles right there suggesting the bears are taking just a little bit of an edge, or more importantly, the bulls have set back a little bit.
Right, they don't have that momentum right now.
Exactly. So, there could be some news this week, early next week that comes out that totally changes that.
Yep.
And if we can, if we can break out, oh man, I think, what do they call it? The Trump trend is working, something like that.
Yep. All right, good. No, that's interesting stuff, and I like the graphics there as well. I'm gonna have to start pulling up screenshots or pulling up my screen at some point here. So I'll let you know why I'm leaning higher, and really it's more of a lean than anything. My confidence interval is not as high as yours, Rick. I'm going to say I am 58% confident, and the reason I'm using that number is I'm just looking at the InvestaQuant 5-day average win rate and profit factor. So we use 9 different systems. 3 of them are 5-day systems, and they look at 2 of them look at price action type stuff, which is acceleration and momentum. We define it as, and the third is seasonality. And on average, those systems are suggesting about a 58% chance that we're higher 5 days from now. So that's where I'm getting that number. I'm not seeing a whole lot of strong evidence outside of that. We do have some positive seasonality today, being that it's the first of the month. The 1st of May tends to be a pretty good day, despite the whole sell in May thing. That's not necessarily May 1st. And then, as Michael mentioned, we got the Fed meeting coming up Tuesday, Wednesday. So we could get a little boost from that on Wednesday. We've got employment Friday, which employment has never been consistently bullish or bearish, but it has been streaky. And recently it's been pretty good. So maybe that'll be another excuse to push the market higher. So I'm leaning higher. But again, other than some seasonal wins, I don't have a whole lot saying higher just yet. Now, if we get that breakout, that Rick was showing, where we have the resistance there, then I think I could see some bullish studies emerging. I look at a lot of quantitative studies. Right now, I don't have a lot of bullish studies that are on my side. I don't have a whole lot of active short-term studies, and that typically happens when you get into these periods of chop, which we've been in over the last several days. So I don't have a whole lot of compelling evidence that I'm looking at. A lot of stuff that's just kind of leaning more bullish than bearish, and that's kind of about it right now for me. I think we hit on some of the big points already, but I want to give you guys an opportunity before we get to our last question to kind of go back, and if there's anything coming up this week that you're looking at that we didn't mention, go ahead and give us the rundown on that. Jim, is there any technical indicators or fundamental or newsworthy things that you're looking at that would change your opinion or strengthen your opinion of the market this upcoming week?
Well, again, from what I'm looking at here, unless the Fed's got some kind of crystal ball, and maybe they do, hiking rates with the consumer spending numbers, consumer income numbers that came out, and the inflation numbers, the PCI numbers that are coming out. I mean, even by Q1 standards, these numbers today, have been pretty lousy.
Yeah.
Consumer spending's not that great either. So unless we're going to have a situation where the unemployment report is going to go through the roof, or consumer credit's going to go through the roof. I've got some buddies who work in the housing area. They did say that at the bank that they work at, they were very active with new purchases lately. So maybe the consumer credit's going to surprise us. I don't know. But from what I'm seeing here, it looks like a lot of things, even that ISM number, is losing a lot of momentum. And, so, and again, a lot of the, promises, are coming in slower or delayed or watered down. And, but I mean, stepping in front of it has just been disastrous. I mean, that NASDAQ is going through the roof as if, it's going to go to 7,000 or 8,000 the way it's running. So the bottom line is that, there's some stuff later in the week that could change the tide here, but I would imagine that the Fed may say things along the lines of, we're going to monitor the numbers a little bit further, because that's really what they're seeing. They're seeing the same numbers we are, as far as that's concerned. So, those are the things.
Yeah, the Fed, to me, one of the interesting things about the Fed is how soon they start paring back their account balances. They stopped with a lot of the QE at the end of 2014. So we've 2.5 years. There hasn't been a whole lot of QE, but they have been reinvesting maturities, and they're going to need to wind down their account balances to some degree at some point, and they've already hinted that they're going to be doing that. So one of the things that I'm interested in hearing about on Wednesday is if there are any new developments there, or if there's any plans or anticipation about that.
Yeah, on a bigger picture, I think a lot of people are very hesitant, and probably should be, standing in front of a $1.5 trillion repatriation potential. I mean, that's just a staggering number, and that's just a frightening thought to be selling into. And I think that might be exactly why the tech has gone on and on and on, because if you had a hedge on the tech stocks, you probably are lifting those hedges, and that probably may explain some of the acceleration in the NASDAQ, because $1.5 trillion is just an enormous amount of money.
Yeah, I'd take it.
Well, I mean, if that's coming back to buy their own stock back and hit dividends a little bit, that's a huge buyer coming down the road. And Johnny Lunchbucket is not going to sell in front of that. You know?
No. All right, Michael, is there anything else you wanted to add that with regards to the things that might change your mind about this upcoming week or strengthen your position?
Not really.
Okay.
I actually believe that somehow the powers that be have put a positive spin on raising interest rates. So a lot of traders coming in and out of the market believe that if they raise rates, that's bullish, and so they jump in.
Yep.
We've seen some pretty strong reversals in some of these individual stocks against what the market really should, the perception of what the market should do. And basically, we've had some good earnings reports, and we've had some bad earnings reports, and the bad earnings reports came within financials. And I'm quite amazed at how they just kind of brush it off as if it was meaningless. And now they're right back at levels, that means to me, suggests that the market is going to move higher. Again, as I said, I believe that in a long-term view, the markets are heading towards their highs, their very long-term highs. And quite often when that takes place, and from my perspective and from my experience, the market moves higher on negative input. And what I mean by that, the numbers could be totally negative, but the market continues to go higher. And so
because
I try not to.
Do you believe it's because it doesn't grasp the negativity at that point?
Go ahead.
And then when it...
I'm not really sure. That would always be my question. It's like, does nobody get really what's going on? And the only thing that I could think of is that, we have so many different types of players, so many different types of traders. And one kind of come in and I believe have positioned themselves in the market are algorithmic traders. And the algorithms are firing off buy and sell orders. And often if they're really related to options trades, they're hedging. So it's not like they're taking a position long or short, they're hedging and completing a trade. And as long as the numbers can match up and do that, then I feel very confident that the longer term view will hold in terms of that we need to see new highs to complete a pattern that's been in progress for a while now.
Okay.
And then once that happens, then we can pull from the hat any reason. There are fistfuls of reasons that the market should not be at the level it's at. And so when people say, well, what's going to make it go down? I said, pick something. There's so many reasons out there. I don't think that any of us can really pinpoint which one and start going.
A tweet, maybe.
A tweet, absolutely. Absolutely. Who knows? So yeah. I think that there's just too many things out there, and that it's kind of just holding itself up. I don't know. Somebody could come out and say, well, it's being manipulated higher. It's like, yeah, maybe, but I don't think that algorithmic traders that are trading options and the underlying.
Right. Yeah. I mean, the market's always been manipulated to a degree, but you can't manipulate it over long periods of time. Unless
right.
you're the Fed, I guess. But still, it's going to find its level.
Yes, I agree.
So, all right, Rick. Anything you want to add before we get to our question of the week here?
No, anything could flip this market one way or another. I mean, there could be some positive news that takes us right out the top. There could simply be something that the market is just totally unhappy with. Could be something the Fed says, could be a missile, could be, it just a number of things. From a chart pattern view, I mean, we have a chart pattern that looks like it's going to go up, but I also see, like I said, I see these bearish signs that we might see a pullback before that happens. I mean, overall, S&P, the Russell, the Dow, everything is looking bullish now. I forgot who mentioned it. Said the transports are a little on the weak side, and they're weakening a little bit. but everything else seems to be overcoming it. That's why it just takes one little thing to take us down. And you know, how far down? Anything to 20, that 2369.20, I think is still bullish. Anything below that, and then what happens is we start playing with it. We're getting back into this whole trend that started back here in March, moving us down. So it's about follow through. It's can we push through this level, and if you can, and it can support itself there, then we're bullish. But until that happens, I have to also consider those gaps in there. For no good reason at all, this market could come back and tap those gaps before it moves up. Yeah. And that's something I've seen. It just for no good reason at all, it just come down and tap those gaps and pop right back up.
Yeah, I guess the only thing. Thanks, Rick. That's
yeah.
You know, that's great additional insight there, and you're right about the gaps. We hadn't talked about them, and I'm looking at a chart of the VIX right now. Speaking of gaps, and so what's been interesting to me is that we had that whole hullabaloo about the French elections a week and a half ago, right? And the VIX popped up to 16.5 or so. At that point, everyone was all worried about it, and then I don't know what they call it, the primary or the pre-election type thing happened, and nobody's worried about it anymore. But now the final election is this upcoming week, I believe, right? So are we going to have another worry about what's going to happen in France? I don't know, but it seems curious to me that all of a sudden we're down at basically the lowest VIX level right now as I'm talking. If it closed here, it'd be 10.26, which I'm not seeing that on my chart over the last several years. So very little worry out there, and that would that's something that could change in a heartbeat, as it has over the last few weeks. All right, let's get to to question number 4, which is somewhat near and dear to my heart because I've used trading systems for a long time, and both fully automated and partially discretionary. So Jim, let's get your take on this to start. Actually, no, I'm going to change the order. We already went Jim, Michael, Rick a bunch of times. Let's start with Michael, who I know uses some automated trading systems. Have you had the most success with fully automated trading systems, or trading systems that are at least partially discretionary? Is the question.
Neither. I again spent a lot of time researching who's in playing and what are they using. And I think when you can really boil it down to that, your competition in most of our futures markets, in fact, I would say all of our futures markets and most of the equity, individual equity markets, are other algorithmic traders, which means it's a computer. Don't anticipate. Computers only participate. And so I felt to really have something in place that is going to fully allow me to participate without emotion, and able to just sit through the noise of a market, ticking up 5 ticks, ticking down 6 ticks, ticking up 3 ticks, ticking down 5, but then eventually fulfilling the direction that your trade is on. I just have witnessed too many traders, both newbies and 20, 30-year experienced traders, just get caught up in how the markets are trading right now and not really embracing what I believe is how markets trade in 2017 and going forward. So I developed algorithms that trigger, and so you're going to enter the market and to buy or sell. And I've figured out that the premise is that I want to always be in the market. So that way you're not missing when a large buyer comes in, a large seller comes in and moves the market. You will be there to participate along with. And I have found that that's most successful. In fact, I found it to be truly successful when I put my auto trader on and then just get up and walk away.
Okay.
And let it do the work. Because if I sit there and watch it, I'm gonna go, oh, well, I don't know if I really have this position right now. And if I go in and turn it off or fool around with it, it never works. So it's leaving it on and letting it do its job.
Yeah, I think there's definitely something to be said for letting systems do their job. I think I think we found at InvestiQuant that a lot of times when people tinker too much, they end up killing the systems, right? It's you let your emotions get involved too much, and you're going in the wrong direction a lot of the time. Right. And
you can consider that, you know, just within our conversation in the last 10, 20 minutes, we've all tossed out. There are many factors that can push a market in either direction. They're just sitting out there. They're waiting. Now, whether they come to fruition, we don't know. So how do you want to trade that?
Right.
And so I think when we get as many traders as we have in the markets today, all with that same concept, you're going to get a lot of what I call herky-jerky type moves. And that's just everybody piling in, everybody piling out. And eventually, they're weighing the odds that they're going to be correct more than they're going to be wrong. And that's where I just believe that, you know, auto traders or algorithmic trading are all programmed. So the way I have mine set up is like you have many factors that you can program in for the market to react in certain things. And so I'm using just one basic that actually is going to generate those buy and sells. How the market, how the order is then handled, where your stop is, where your profit target, et cetera, those are all inputs that can be changed, put in, and even the time frame on which you want to trade, that can be adjusted. But it's one basic algorithm that's which is based on volatility and statistics and probabilities.
Okay.
So if we're trying to trade and follow volatility, then, you know, the auto trader is going to do a better job than we can, because it's just going to enter the order instead of when we're sitting here trying to decide, and suddenly you're saying, well, I don't know if I'd really take this sell, or I don't know if I'd take this buy. And then meanwhile, the move starts and now it's up $1 or $2, and you're going like, well, I was wrong. And either you're going to try to jump in late, which could be right at that turning point. So I like approaching the market without an emotional basis. And that's what I do with my auto traders.
Interesting. All right, good. Rick, how about you? Have you had more success with fully automated trading systems, or trading systems that are at least partially discretionary?
Well, in all honesty, I've never traded with a automated or even partially automated. I've always done everything from my chair here.
Okay.
Just simply following the charts and chart patterns. So yeah, I've got no experience with that. I couldn't say one way or the other.
All right, that's fine. Jim, what about you?
Yeah, I don't have much experience with the automated either. I'm aware of them, but not much experience. But you know, it's all according you know, all those things about how much capital you're working with, what your temperament is, and all that stuff. But you know, people do hire you know, guys to manage money when you buy an ETF or a mutual fund or some type of a tradable device. So, you know, it wouldn't make, it's not that much of a leap if you were diversifying to try to find a trader with a system and a track record and, you know, something you believed in, and maybe his compensation might be tied to a percentage of profit. You know, there's so many different ways to go out there in the supermarket of investing now. But to diversify with an actual guy who's got a system and you like his system, and you know it doesn't mean that in the future it's going to be the same results as in the past, but it's worthwhile to look at it because you like the way he's doing things with options, or you like the way he's trading those contracts. You know he's linked to the thing growing. You know that type of product or device is certainly worthwhile to investigate and see if it might have any value to you.
All right, good feedback there. So I'll give a little bit of what I've done with automated and discretionary type trading systems. Most of what I've done has been with what I'd call partially discretionary, like David described here. So I use a lot of studies, which are in and of themselves kind of like mini systems that will give me a bullish or bearish bias. And like any indicator, like a lot of the factors we're talking about today, you'll get some positives and some negatives. So I just use some tools to kind of measure out what the systems are saying, and then I make educated decisions based on what what a lot of these systems are saying, or studies is what I generally call them. So I'll get a bias, and then I'll say, all right, you know, it looks like we got a decent chance of move up over the next few days, and we're a little bit oversold here. I'm gonna take a shot at the long side, and that's generally how I've done things. Even with systems on individual stocks, a lot of the times I want my bias to match what the system's saying. So if I have a long bias, say, over the next few days for the general market, then I'll be looking more towards long triggers in my in individual systems that might be triggering in different stocks or ETFs. If I have a short bias, I'll be looking for, you know, my best short systems that are triggering to give me some trade ideas. So that's a lot of how I've traded over the years, and that's where I've had most of my success. But I have done automated trading as well, and I've generally used kind of a portion of my account and traded it in an automated manner. So, and it hasn't always been fully automated. It's been, you know, mechanical. So for instance, the big time swing system on quantifiable edges, I released that in 2009, and I traded it in other forms prior to that, but I traded it in that exact form ever since. And I kind of call it my my lazy system. Right, I allocate a certain portion of my portfolio to it. I have enough confidence in it that I'm like, all right, you know, if it signals, I'm in, and once it signals off, I'm out, and I just let it run, and I don't really worry about it. And that's great to do with a portion of my capital. I wouldn't want to do that with my entire capital base. I like to take other things into account as well. And I found that, so now at InvestiQuant in the last year or so, we've also released some automated systems. And again, I think, and I allocated some capital to those systems, and I've had some success there as well. And what I like about them is that they look at different time frames than I look at. So for instance, there's some that trade intraday, and I don't really trade intraday a whole lot. I mean, I'm in front of the computer a lot, but I'm not necessarily, I don't do a lot of day trading myself. I'm more swing oriented just because I like to make my decisions at night when I can kind of sit back without the heat of the market, you know, and I'll look at my quantitative systems and I'll say, all right, I'm going long or I'm going short if it hits these levels, and I just put in the orders at night, and then I'll reevaluate the next night. So that's kind of how I do most of my stuff. But by automating part of it, it allows me to take advantage of, you know, edges that we've been able to identify that I wouldn't on my own be able to trade. So I found recent success with fully automated systems, but I've had most of my success with partially discretionary. but I think there's definitely a place for both. And I think even guys like you, Rick, that say, well, I don't necessarily do automated. You still have your methodologies, right? So
Correct.
The candle patterns, when they trigger, you're taking it, you know, and
yeah. I mean, if you have the candle patterns, and if you have the trend, and if you have the support, I mean, if you have all that is an automated system that you control, rather than that still has emotions in it, where an automated system done by a computer, the emotions are eliminated.
Correct.
So I guess all traders really, at some point, there's some sort of automation in their trading.
Right. Most of us is partially discretionary, but it's not as much of the fully automated, like like Michael does more of. But yeah, I mean, everyone's doing some kind of system, at least, if they've got any, if they're going to have any success, they need a methodology for getting in and out, right?
Yeah. In this market, you need several tools in your toolbox.
Yeah.
That's for sure.
Yeah. All right. And so, speaking of tools in our toolbox, why don't I go around and we can, unless anybody else wants to add anything else to that, I'll give you the opportunity to do that, and then otherwise we'll go around and talk about trade ideas for this week, and let you tell us anything else that's going on at your sites. No takers?
Who's first? Oh, I thought you were.
All right, let's go. Rick, if you have a trade idea for this week, that'd be great, and let us know what's going on at Hit and Run Candlesticks.
Sounds good. Is my chart still showing? Everybody see my chart?
Yes.
No?
Yes, I still see it.
Okay.
I was looking at my charts. I switched off. But yes.
Well, I'm gonna talk about this win here, and I know not every trader out there can take a $122 trade, but one thing about it, the chart patterns are all the same. Doesn't matter the price. Now, to be completely honest here, see that little red arrow? That's where we went long. Now we're still in it, so I just want everyone to know that. And right now, what's that?
I said you got some cushion in the trade at this point. That's what you're
That's some cushion, yeah. Now I've taken half of it off. It's not the whole trade here, so half of it is off now. So the second half, I get to play around a little. But man, this thing is looking like it's still cooking and still planning to go going higher. And if you take a look at the weekly chart here, that really points it out where it might go to. And I'm seeing this right here. We get through that weekly 200 period moving average, and more than likely there'll be some consolidation there, but I'm seeing this up in the 155, 160 area, which, whoops, oh man, what did I do? There we go. So I'm still seeing a very, very good trade here. We've just now broken out of these highs right in here. So I just feel there's still lots of trade. It's a terrific chart pattern, inverted head and shoulders here with a nice target on that little bit of a bullish, bearish battleground right in there. What's going on at Hit and Run Candlesticks? We currently, this week, starting today through Saturday, because our Right Way Options will be having one of their members e-learning, but it is open to the public. So our trading room this week, all day open to the public. And it's very easy to get to. Simply go to the website and click on Trading Room Login. Make sure you use Room 2. Click on Room 2, and then you just simply have to log in. You're an attendee. Just put your email, put enter webinar, and you're in the room. So that's something going on that I think is big and noteworthy. Would like to invite the audience out there, if you're hanging around, if you got nothing to do, come on in. So with that, there's I don't know how much time I have here. There's a couple other trades. I just noticed while
We can do probably one more if that's all right.
one more. Okay, yeah.
We know win's a winner, right?
Yeah, I think win's a winner. Here's another one. Some SUM.
Well, it's kind of a gamble, right? Win is it's.
yeah.
Win resorts, so people.
Win resorts, yeah.
It's casino
gambling. Here we've got this trade that, kind of this consolidation in this area. Some great little swings in there for sure.
Yeah.
But now we're starting to, if we break out, and I'm going to jump to the weekly chart just so we can see more of it. Then we have a chance to move up into, retest these highs. And from here, what are we looking at? 9-10% trade, and then a breakout. That might take you to that $35-40 area over several weeks. But the most important thing, it's a trade that's working, and I think everyone knows that trade within a trend, and your success rate just skyrockets. And this is one that's moving up. So I'll leave it with that.
Yeah, this is looking like it's breaking out almost as you're talking here. So
yeah, and I caught it over here on our scanner. I just saw it, and I wrote a couple of them down while everyone was talking. There's a few more I see. It looks good. And
people that are listening live,
what's that?
People that are listening live have an advantage here.
yeah.
So
yeah.
All right. Thank you very much, Rick.
Hey, thank you. It
was great getting to talk to you and learn about hit and run candlesticks.
Yes.
Michael, what's if you got a trade idea for us, that'd be great. And logical signals. If you could let us know what's
as far as trade ideas. Trade ideas. I do look at options, and I'm a volatility trader. So no matter what, I'm putting on a volatility trade basically, and in options, volatility equates to premium. So you're trying to sell big old fat options and take advantage of that. So I don't really have any recommendations to put on a trade because of the way that I do trade. Being a day trader, I basically do not come in with a position, so you're fresh and clean every morning. And we preset according to account size, according to risk, using good risk management, what an account should take in terms of profit and loss. And then we work from there. So, but what I will say is that again, trust that system, see how, particularly if it's like mine, which is basically going to trigger long or short, along with what is happening in the market volatility wise. You need to just leave it alone and let it do what it needs to do. And the biggest example of that would be, this morning in gold, what happened right at 7 o'clock Pacific time. So whatever, add what you need. One of the figures came out and the market ran up. But then, according to my algorithm, we got short at 1268.30. And if you would have sat and watched it, you probably would have been caught trying to get out because the market, there's a lot of noise as the market unfolds. But that particular trade we covered at 1261.30. So in a one lot, it's $880.
Wow.
So, you can't really complain. And then it kind of got, it played the little bounces there, but managed to basically the whole thing. So you paid cost. Then we got short again at 1260.30, and that one covered at 1256.80. So there's another 400. So, when you're up $1,200, you just say thank you. And so that's kind of how I operate, and just by letting the algorithm do what it needs to do.
Okay.
And this is on a medium term. I mean, I use uni wrinkle bars, and the settings that I have on right now are basically equivalent to a 5-minute chart and both are closer to a 5-minute chart. But you're not having to play some bigger swings that even on a 5-minute chart the market can tend to do as players move in and out. Having a position on and then holding it to play the trend for that period of time.
Okay, interesting.
My
Thank you,
recommendation,
Michael.
yeah, so my recommendation would be like, come on into the trade room, take a look, see what's happening. And if it's something that's for you, then we set you up. Go from there.
Great, and that's logicalsignals.com, correct?
Correct.
Okay, so everyone can find you there. A lot of good
Yes,
ideas, and it was great getting to talk to you.
Thank you.
Again. And Jim, let's go to you. If you got a trade idea for the week, that'd be great.
Sure. Well, I was gonna give you a little bit of an idea, Rob, on a strategy on a number of markets rather than a specific trade, because that's not what I do. But I will tell you this: optionprofessor.com. You can learn about a whole bunch of different strategies, and with the implied volatility in a lot of these markets now, gold obviously is picking up on volatility, but last week the volatility was quite low going into it, and that's true in the S&P, and it's true pretty much across the board. Interest rates, oil, soybeans, they all have fairly low implied volatilities going into this week, so those might want to learn more about how the strangle works and price out 30, 60, 90-day strangles and see if a limited risk position on both sides, and then you know exactly where you are risk-wise on both sides, and then if all heck breaks loose like it is a little bit in the gold today, obviously those premiums can expand dramatically if you get the volatility. And so that is what you can learn on the DVDs as well. And then, of course, insurance on your stocks, married puts is not at a high level now. So if you want to stay in the game but have a parachute, or shall we say some kind of a net underneath, a married put against positions, albeit you're paying premium, and it'll obviously increase your cost basis. If we do get a surprise number, or if we get a surprise tweet, or people say, hey, listen, the transports and the banks have lost their momentum, and this FANG trade and NASDAQ trade, may have a an extension that could hit here. Having a few puts against your stock in case it rolls over might not be something bad to investigate as well. So that's what I would suggest, is to learn more about how all these strategies work, so you have an arsenal of tactics, and then you look at the circumstance and try to apply the tactic to the right circumstance. Excellent.
Thank you, Jim. I hope people check you out, optionsprofessor.com. It's always good getting to talk to you, and hopefully we'll talk again in about a month.
Yep.
All right. I have one trade idea. It's XLP, using one of the InvestQuant tools. It's coming up as the security both among our stocks and ETF list, with the highest average profit factor among the 9 systems, and it's mostly due to its 5-day momentum system right now is showing some very strong statistics, as well as several of the other systems. The seasonality is looking good, and some of the other momentum systems are looking good as well. If you look at it on a chart, this is the 4th day in a row it has pulled back after coming very close to its all-time high, which was last July. So it's in a short-term pullback, which you could almost view as a type of a handle on a long-term chart of a big basing pattern or cup type thing. So this is one that I think has, we're seeing there's some swing potential, and that swing potential would probably go away as it gets back up near its resistance level or near its old high. But if it gets through there, then you've got some longer term potential too. So this is one you could potentially get into XLP somewhere around here, and if you get a little bit of a bounce, take some profits on it, and maybe you get a more of a long-term run out of it if the market does not roll over in the next few months. We could see this run a bit further. So that's my trade idea for the week. You can check me out again at quantifiableedges.com or investaquant.com. We got a lot of offerings at InvestaQuant. Quantifiable Edges, you're able to take a free trial anytime. So, and I will be having a webinar for InvestaQuant next week that will talk about my Swing Navigator newsletter, which utilizes a lot of the Swing tools and talks about the systems we have at InvestaQuant. It's a nightly letter. I offer trade ideas in there each night, and some people have had some great success with it. If you go to InvestaQuant, you can see a recent blog post from a guy who's done real well over the last 9 or 10 months or so with it. His name's Jack. So that's it for me. It was great getting to talk to you guys again. Thank you for having me again, David. I'm sorry I was late, and it looks like I went over also, so I'm in real trouble today.
That's all right. Great show. So thanks, everyone. And for everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us next week on May 8th. We'll have Anka Metcalf, Barry Burns, Vince Vora, Simon Klein, and Matt Buckley to moderate. Just want to thank my guests again for this week: Rick Sadler of HitAndRunCandlesticks.com, Jim Kenney of OptionProfessor.com, Michael Filigera of LogicalSignals.com, and Rob Hanna of InvestaQuant.com. Thanks, guys.
Thanks,
Thank
David.
you.
Thank you very much. Appreciate it. Take care, you guys.
Thank you. Bye.
Bye.